You're watching Stock Watch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today is Alex Duys from Umthombo Wealth and Pierre Verster from Protea Capital Management. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Thank you so much for your time, gents. Let's actually start off with the kind of whiplash that markets have gotten from Trump. I'm thinking that that is actually how we're all going to be for the next 4 years. But Alex, just looking at the last maybe 48 hours and what Trump has said on the tariffs, where they seem to be, his foot was on the acceleration pedal, but then now seeming that it's come off a little bit. Alex, just, your thoughts on how markets have taken that?
Good evening, Zinati. I think it's important that viewers and investors don't get too politically, specifically from Trump. We know Trump is going to be like a bull in a china shop. He's going to disrupt, he's going to create problems, and that's part of his negotiating tactic, right? So yes, doesn't mean there won't be particular issues that we have to take seriously. But in general, I think we shouldn't overemphasize every single decision the function of company fundamentals, cash flows that generate, and so forth. They're saying that there could be potential issues for South Africa. We don't know what exactly the so-called detailed investigation of South Africa will entail. Will it, for example, go into Iran? Is it going to be based on the policies we recently signed? We don't know. So we have to wait and see for more evidence. But in general, I would like to say, don't overemphasize every single movement. I mean, whenever you sit on mainstream news, specifically something like a Bloomberg, almost every minute you hear the word Trump. And if you're going to do that for yourself for the next 4 years, you're going to have analysis paralysis. You're going to be clueless for what you need to do.
But I imagine that it is so hard, because as soon as he says something, something moves, something shakes. We've even seen it in the rand. JP, your thoughts?
True, Zinati, and I think I'll follow on from what Alex has said. I think investors and traders would look at the news flow differently.
Okay.
So for a trader who's the whole time looking to buy something that is in the short term going to go in the direction the trader is hoping it will, and then the trader wants to get out, oh my goodness, this whiplash is terrible. Or if you get some of these right, it can be wonderful. But for investors, I think if you take a longer term view, whether tariffs come in, a 10% tariff here, maybe a 25% tariff there, companies adapt. Companies these days have got options at their disposal of where they source products. And what we've seen in the last few years is whenever politicians do interesting things, make interesting decisions, companies have got strategies to mitigate a lot of that. So as investors, we shouldn't second guess the companies. If you invest in good quality companies with good management teams that have thought about these things and have prepared the company with contingent plans, then you don't need to second guess them and worry too much about when politicians say things and do strange things as well.
Well, there are quite a lot of questions where viewers are really just referring to the situation in the US and the impact on the companies. So this is a general question on banks. How will banks perform under Trump's tariffs in South Africa? How far-reaching would the impact be on the banks? And would it come from basically how the rand is performing, Alex?
I mean, let's look at South African bank fundamentals. So if South African GDP growth 2%, then I think it's quite likely that the banks will probably, in general, deliver earnings in the region of, call it, high single digits to low double digits. Now, if they can achieve that on the current valuations, I think the bank still offers a good opportunity. I mean, something like an Absa expectations as it is that they'll still grow earnings going forward. So, that's quite compelling, considering where inflation is in South Africa, and also where perhaps the equity risk premium is in other markets. So I think, once again, don't overemphasize what is happening globally. to make knee-jerk decisions here. I think if you're still relatively constructive South Africa, then the banks, I think, offers a decent opportunity. Obviously, if there is something that material happens, like we do get a big shock to global markets, that'll impact everything, right? So not only the South African banks, or if there's, for example, everything that's South African related. So don't get too caught up in that. If that is a concern for you, then you shouldn't really have that much South African exposure. But yeah, that's pretty much, I would say, I think, in general, I'm quite constructive on the banks.
All right, interesting. There's another question on the banks as well, specifically on Standard Bank and First Rand. Given the drop in the share price of these two banking shares, are these prices considered cheap at the current levels of the shares? I was actually looking at that Standard Bank share price, and it is not a pleasing picture, as we're seeing a lot of downside there. But I think today was up. Even First Rand also had a little bit of buying activity on it. JP, First Rand and Standard Bank?
I see value in both those shares. Maybe not dripping roasts. They were cheap before the election, and they are up substantially over the last, call it 6 to 9 months since the election. But still, after the slight pullback of the last 3 months, yes, I do think they're in value territory. Obviously, in the case of First Rand, they have exposure to the UK, where there's a big thing about going on about mis-selling and not telling people when they take out car loans that actually they were paying some fees to middlemen. But it sounds like the politicians are getting involved there, because the numbers can be absolutely huge if some of the first cases that came out set a precedent. So one hopefully expects that big risk has been mitigated. In the case of both banks, but specifically in the case of Standard Bank, you've got significant Africa exposure. Yeah. We know in most African countries, very resource-driven, resources have been under pressure, so currencies have blown out. Sovereigns across Africa, the governments across Africa have got too much debt. Normally that debt is not in their own currencies, so they're in trouble. The IMF have bailed out some countries and put in some stringent debt limits. So it's not a pretty picture over the rest of Africa. But a bank like Standard Bank knows how to negotiate these treacherous waters. And a lot of what they do means that they are dealing with multinationals, and the revenue still comes to Standard Bank almost irrespective of how difficult things are in those local economies through transactions that they still facilitate. So I do like both banks at the current prices, yes.
An interesting thing that I saw today on Sens was that Coronation actually disposed of some of their shares in Nedbank. But they still own just under 5%. Alex, do you think this was just a negligible thing, that because they still own such a big stake, it's really not, there isn't too much to read on that?
Look, the South African banks have done very well from COVID lows. It depends when they bought majority of the stake. Perhaps the portfolio was overexposed, or they're doing some recycling. You don't know, so you can't really comment too much into that.
Okay.
But I concur what JP has said. I think there are certain different risks and drivers, as JP alluded to, but in general, I think most of them, these companies are very well managed. They have been managing in torrid economic times in South Africa and South Africa over the last 10, 15 years. So I think they're used to it. They know how to operate. And
yeah. Alex, you do keep on breaking there, but we are getting most of what you are saying, but there seem to be little pauses there, kind of like what Trump is doing with Mexico and Canada. But it's still not too bad, but hopefully we can get that sorted also very soon. We will be going to a quick break also in about 3 minutes. JP, there was a hectic knock on Merafe yesterday. And that pressure is, we're still seeing a little bit of that pressure. It was down about 3%, more than 3% today. I think yesterday it was down 20%. Advice on what to do with Merafe shares?
Tricky one. So Merafe, as you know, is a very, very large company. They have 1,000 employees. 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 They have 1,000 I'm not an expert on the ferrochrome market. I should say that up front. But whenever a company announces that they are looking at the operations and restructuring the operations, and they potentially might mothball the ferrochrome operations, the smelting thereof, that's not great. If you think about what ferrochrome is used for, it goes into steel to make steel even harder. And steel mostly goes into construction, building high rises in particular. And, China has seen a boom in construction, but more of late, we've seen the bust. They overbuilt. It's becoming clear now that a lot of developers built too many units. And when you have a population decreasing, as China has these days, then just building more and more apartments doesn't really make sense. So that's bad for property prices, it's bad for property development, therefore bad for steel demand, and therefore bad for ferrochrome demand. So yes, what you should do, Merafe has got a tendency to do nothing for a while and then all of a sudden shoot up when ferrochrome prices shoot up, and then they mothball stuff. I remember the same thing happened in 2008, and then people are up in arms, and then a few years later they bring things back online, and then they make a lot of money again. So you either need to get out and rather invest in things that aren't as volatile, or you need to brace and know that you probably need to hold it for a few years until they decide to flip the switch again.
Yeah, there's really a lot that's happening. I mean, just even talking about steel, we do also have ArcelorMittal coming out with the results, I think, on a Thursday. Of course, we know the woes that the company is currently dealing with there. Your thoughts on Merafe? Is it on your radar on any level, Alex?
This was certainly a big setback because, there was certainly some school of thought that Merafe was going to pay out a very nice dividend going forward. And I would imagine this is going to have quite an impact on that. Merafe has always traded at, we've seen extremely cheap valuations, and it's because of the high volatility of the business, as Jean-Pierre alludes to, as well as the governance structure, which is not ideal, and perhaps the management that's tied to Merafe and so forth. So there are certainly some problems. I think you bought this for the dividend and call it a call option on ferrochrome prices, and that doesn't seem likely in the moment. So it's probably a better opportunity to consider. But saying that, it will have its time again at some stage in the future. But for me, I don't have the patience or willingness to really look into the stage.
All right. Let's get into gold. I can imagine with all the risk that the gold price is in a happy place. So the question is, with the global turmoil, there is a lot of talk about investing more into gold. With the gold price at an all-time high and the recent rally of many gold mining shares, is it wise to invest in gold at such high levels? And if you think it's wise, which stocks would you represent, and what percentage of a total portfolio should be considered? Let's start off with these levels, JP.
I do not think it is wise, Zanati. The thing about gold is you should buy it when everything is calm and the gold price is low and people aren't afraid. And at the moment, people are afraid of tariffs and the gold price is already high. And you already saw a little bit of a wobble today, just after a number of days of strong gold price performance. What I would say is, over the long term, gold in dollar terms and more specifically in rand terms does seem to go up because we keep on printing dollars and minting rands, and that means there's more money in circulation. So over time, you would expect the gold price itself to go up. So if you want exposure to this asset, then buy gold or buy an ETF that's purely gold, like the new gold ETF. When it comes to the gold miners, I always wait for the opportunity to short them. It doesn't mean I've done this successfully. Indeed, more recently I have not. So it has hurt a bit, but over the long term, it has been shown that the gold miners can't keep up with the increase in the gold price because they have cost themselves. So maybe 5 to 10% in gold itself, not the worst idea, but I wouldn't be investing in gold mines once they've doubled and doubled again in price as they have done over the last 3-4 years.
Well, I mean, Harmony seems to be kind of proving you wrong because they keep coming up with really, really strong operational results. And of course, that's a great recipe accompanied by the high gold price. Looking at the specific miners, Alex, would you be interested in some of those, maybe Harmony at any point?
Look, I can go what Jean-Pierre just said there. I think just perhaps add, gold does add quite nice portfolio diversification benefits over time as well. It tends to be, call it lowly or negatively correlated to most other assets. So it does add value from that perspective. Bring it back to Harmony. If you look at the set of results, in a way they were bailed out by the high gold price. The production numbers weren't that particularly great. The all-in sustaining costs are going up. So if gold price comes down, you're going to see a negative operational leverage in the business. But because gold price in rand terms keeps going up, they're printing money. So if the viewer believes that gold will remain at these levels or go even higher, then Harmony will probably still do well. But I do think many of these gold companies will start struggling. Another way to look at it is when the PGMs did well, investors did receive predominantly a lot of dividends. These gold companies, you barely get any dividends, and they're all investing or doing all sorts of corporate M&A deals. That's also usually a sign that we're at top of the cycle. So for me, I'm also a bit cautious. And historically, whenever I felt like I had to buy gold, it was like a pain trade. That was for me the perfect indication that we are at the top of the cycle. I just need to be patient and for reverse. But the fiscal situation globally remains a problem. I think, but I think some of the geopolitical risks we've had and some of the wars is probably starting to come to an end. So that overhang, I think, that's played already, and I think it's going to stop becoming an overhang at some stage.
Well, something that's not coming to an end seems to be the rise of the MTN share price. The question goes, why is the share price of MTN rising with dark clouds rising in the US and allegations that MTN bankrolled ANC as proxy for Iran, resulting in possible corruption charges? Just on the Iran thing, JP, that's been going on for years. I would imagine that at this point it's not really a factor for investors.
Correct. Look, it might be a factor. That case has been inching along for years now, and there was an announcement last year, I remember, where the Department of Justice in the US did say, well, they haven't closed it yet. It is still open. So it's not completely away, but investors normally have got short memories. So when something isn't in the news for longer than 6 months, people don't give it too much attention. So the MTN price is up because of the significant tariff increases in Nigeria, 50% tariff increases. But I would say that the share price has now mostly adjusted for that. So from now on, you need good operational performance of the company to drive the share price further. You saw with Vodacom in the last few days that their share price has also done well, because there you can see that they've pushed through prices. Anyone who's a Vodacom prepaid subscriber or postpaid subscriber would have gotten a little email in the last week, like I did, perhaps saying that you thought you were on a, call it 500 Rand package. Well, now you're on a 550 Rand package, and there's no way to stay on the 500 Rand package. Yes, you're going to get a little bit more minutes, a little bit more data, but you're going to pay 10% more. So that is in effect a price increase. They give you more for it, but that's good for the business. So if MTN can do something similar and engineer some inflation in the top line, then they can do reasonably well. But over the long term, telco companies, mobile companies struggle again to keep up with inflation. So longer term, I'm not a big fan of mobile operators.
Well, that's quite interesting because, investors weren't big fans of them last year, but now it seems that the tide is turning, but maybe not for too long. I don't know. Alex, your take on that growth, the trajectory of the telecoms companies?
Yeah, I concur with Jean-Pierre. Certainly long term, I'm not a fan of telecoms. Yes, so MTN will get now higher earnings, right, from the higher tariffs, but not without risk. It's a good chance that there might be pushback against those price increases, or also MTN, of course, have struggled to get the cash out of Nigeria. So this accounting earnings is meaningless if you can't get the money out of the country. So all of these factors, I still think, is a bit of an issue there. So I think, it's probably reflective of that new news now, but I'm not getting excited about MTN at this stage, quite frank. The CapEx requirements keeps going up. You always have some form of regulatory risk. And you've got a Nigerian government which is always rogue, so it's very difficult. So for me, it's good for those investors that bought at the bottom, we'll call it the last month and a half or so. But from this point onwards, I think there'll be opportunities.
All right. I've got a question for each of you. JP, there's a specific question for you on the Markel group. And then I don't know if you're allowed to talk about Capitec yet, but it's fine. I'll give it to Alex. So, JP, Markel group?
Sure. So it's been a while since I've looked at the Markel group. If it is the one I'm thinking about, it's a US insurance business, sort of like a mini Berkshire Hathaway. And my preferred short-term insurer in the US is Progressive Insurance. I prefer Progressive Insurance. It's a clean-cut, mostly motor vehicle business, almost like our insurance in South Africa. But Markel isn't bad. The underwriting discipline is there. They don't have quite the good track record of combined ratios below 100%, which is a good thing when it comes to short-term insurance, in the same way that Berkshire Hathaway or Progressive has. And not all the investments have done as well as Warren Buffett's investments at Berkshire Hathaway. But it's a solid insurance business. I haven't looked at the valuation in a while, but from a qualitative perspective, I do think it's a decent business. And then on Capitec, I would just say, Zenati, when I'm on again, I am comfortable answering that question now because it's been more than 6 months since I retired from the board. So next time you can give that one to me.
Oh, watch all the viewers asking you about Capitec now. It's going to become the new Sasol, Alex. Capitec, you've said that there's opportunity in all the banks. Do you see Capitec in that list as well, or not?
Yeah, certainly. I mean, Capitec has been the remarkable ability to grow revenue and find new revenue streams, and we've seen it in updates they've released, and they've got a pipeline of, I think, great optionality and growth going forward. I think one thing for African investors is difficult is you look at the valuation compared to African stocks and you're like, okay, perhaps get a bit concerned. But Capitec will probably double its earnings at least over the next 5 years. If they can do that, then the valuation will probably follow to some extent, right? So I think it's a tough one where a lot of fund managers are value conscious, but at the same time, the strain is only going one way and it seems it's going up. So it's very, very difficult. I guess I would be a bit more picky and I would like some form of pullback. It has pulled back, I think, about 10 or so % of late. So probably it's looking a bit better now. Perhaps another 10% of looking very interesting, but I think fundamentally the company is very well positioned.
What about Datatec? Datatec actually was up today about 4%. I didn't see any news out on Sens. Is there anything that you've heard in the grapevine, JP?
I think the CEO, James Montanana, bought roughly 30 million rands of shares recently. So people might think that's a sign. If the CEO is putting his money where his mouth is, maybe they should do the same. And so I think it's a decent company. It's also one that it's not really longer term, the business model that I like. They basically distribute a little bit of hardware, but since they sold a big chunk of the Westcon business, it's more a IT services businesses now. Decent business, but very difficult to get operational leverage because every time you get more clients, you need to employ more highly skilled people to deliver that consulting service. Maybe they can save some money by using AI, using ChatGPT rather than more people. But then a lot of the clients will say they can use ChatGPT themselves rather than getting the consultancy. So, there's been a lot of corporate action. Roughly a year ago, they even considered re-looking at the whole business, the whole group, maybe restructuring the whole group. Who knows, maybe breaking up the whole group. The CEO, Mr. Montanana, is also not getting younger. So as he inches closer to retirement age, maybe there is an end game for Datatec. So it's an interesting one, but not at the top of my buy list.
We'll talk about the end game. We have reached the end of Stockwatch. Let's get to your stock picks for today. Gents, Alex, what are you choosing?
Yes, I'm going for Boxer. So we got the update today pretty much in line with expectations. I think some investors perhaps get too bogged down in the detail and thinking about what's going to be the like-for-like number in the next 6 months or so. I think with Boxer, I think highly probable, if you look 5 years from now, the stock will probably at least double, in my view. So I think it's one of those that you put in a bottom drawer. We don't have many quality growth stories in South Africa. So I think this is one we're following. It doesn't mean there will not be any speed bumps along and there might be big pullbacks. There will probably be a good buying opportunity for long-term investors. So it's one that I like specifically for that case.
All right. JP, where are you finding opportunity?
I'm finding it in Denmark, Zenati. So my stock pick is Novo Nordisk, one of the biggest pharma companies in the world, and they specialize in weight loss drugs like Ozempic and Wegovy. Ozempic is actually not really for weight loss, but people have been using it for weight loss. And the share is down 40% in the last 6 months. It has shrunk. It has lost weight as people get concerned about the rivalry between Novo Nordisk and Eli Lilly. And Eli Lilly's drug, Mounjaro, has been winning market share against Ozempic and Wegovy. But I do think if you think about it broader, not just in the US, there are so many people who want this drug, who want to lose weight. Excess weight is associated with so many bad health indicators that I think ultimately a lot of people are going to end up being on one of these two drugs, whether it's Eli Lilly's or Novo Nordisk's. And therefore, this 40% correction in the share price is an opportunity to buy a very high quality company at a decent valuation at the moment.
All right. Well, thank you so much for your analysis today, gents. I appreciate it. That is all for tonight's Stock Watch. Thanks to our guests, Alex Duys from Umthombo Wealth and Jean-Pierre Verster from Protea Capital Management. Up next, The Close. Stay with us.